Good morning, and thank you for joining today's webinar hosted by Payroll Plus, a multilingual company specialized in simplifying payroll across Mexico. My name is Laura, and today we'll be telling you a little bit about registering travel expenses and fringe benefits with the tax authorities and in accounting books. Please remember that this presentation is a very summarized explanation. We won't have time to go into a lot of details, and we'll have to leave out quite a bit of information. So if at the end of the session you still have questions and we don't have time to go over them in our question and answer session, please feel free to contact us, and we can answer any remaining doubts or questions that you may have. Before we get started, please let us know how you found out about this webinar by answering our first survey question. We'll only have two, so this is the first of two, and we'll give you a few seconds to answer, and then we'll dive right into the subject. So again, how did you find out about our webinar? Please answer using the options provided. And while you answer the question, I'd like to remind you that we'll be sending you all the material and the link to our audio within the next few days. You'll also be able to find the information through our website, www.payrollplus.mx, and it will also be available in our YouTube channel. You'll be able to find it as payrollplus.mx. So please feel free to subscribe to the channel so that you can have all the information that we provide, videos and webinars. And start with today's webinar. So thank you for everybody that answered the question. Now to today's subject. Today's webinar is going to focus on travel expenses and fringe benefits, and mainly how these need to be filed and reported to the authorities and registered in the accounting books. This subject has created some confusion regarding the payroll CFDI. So when we mention CFDIs, we're referring to the electronic invoices that need to be generated or issued for all income that is provided to the employees. So the purpose of today's webinar is therefore to provide you a little bit of guidance and our opinion regarding the correct handling of these concepts and their practical application in payroll. We're going to start by going over a little bit about some background items, mainly regarding travel expenses. So generally speaking, benefits that are granted to employees by their employers are to be considered as taxable or exempt. However, questions arise as to what happens when the employer receives amounts for advances on travel expenses themselves, or fringe benefits. To answer these questions, we first need to understand what each of these concepts mean. So regarding the travel expenses, when we talk about advances and travel expenses themselves, the term used in Spanish are viáticos and gastos de viaje. Terms have been purposefully been left in Spanish, as in Spanish they're not as self-explanatory as in English. In English, we simply refer to them as advances on travel expenses, viáticos in Spanish, and travel expenses themselves, gastos de viaje, which are also self-explanatory in Spanish. So basically what we're doing here is differentiating the amounts that are received before the employee goes on a business trip as an advance. These can be in cash or in kind, and the amounts that they have actually spent during that business trip, and which would result in either an amount that needs to be refunded to the employer by the employee if they did not use the full amount that they received as an advance, or an amount to be paid by the employer to the employee if they had to spend more on their business trip than they received the advance for. So what does this mean in terms of payroll CFDIs? Advances in the CFDI, remember that CFDI refers to the electronic invoice or payroll receipt that has to be issued. So advances in the CFDI for payroll will be identified as other payments. So that's to say that it's an amount that is simply reported back to the authorities for informative purposes. They won't have any effect on the employee's taxes or social security contributions. We're simply informing the tax authorities that the employee received X amount as an advance on travel expenses. Now, for the travel expenses themselves, these can be classified in what we can define as verified or not verified. So what do we mean by this? By verified, we mean that the employee must provide supporting documentation to prove that the money was indeed spent on travel-related expenses, usually accommodation, transportation, food, etc. So they need to provide a CFDI for that expense, or worst case, they can't obtain a CFDI, then they must at least provide some kind of receipt to again prove that the money that they spent was indeed spent on the travel expense. An expense for which supporting documentation has been provided will not then automatically be deductible. We must make sure that the document provided, so a CFDI, an electronic invoice for the expense, needs to meet all the necessary tax requirements. So an employee can provide the supporting documentation to prove on his side or his or her side that they did spend the money on travel-related expenses, but then it needs to be a CFDI that's correctly issued with all the correct information in order for that that expense to be deductible. And then, so then we can determine whether the expense is exempt or taxed the employee based on whether or not they have provided the correct documentation. Travel expenses are classified as an income for the employee. Therefore, when reporting the information back to the tax authorities, again, we have to determine whether or not it's taxable. And remember that they're taxable if supporting documentation to prove the money was spent on travel expenses not provided. And all travel expenses, again, need to be proven with the corresponding invoices. If the employee does not provide the appropriate proof for the expense, the amount spent may be considered as taxable income for them. That said, how do we determine if the travel expenses is or not deductible for the company? For this, we need to revert back to the income tax law to see what that law establishes. So in Mexico, the key aspect and the first thing that we need to look at for deductibility purposes, again, in Mexico, for all expenses, not just travel expenses, but everything that the company spends, we need to ask the question, is this expense absolutely necessary for the running of the company's operation? So with this in mind, the first thing to consider for travel expenses is that trip absolutely necessary for the company's operations? If it's not, then technically the related expenses are not going to be deductible. However, if we determine that this trip is considered as absolutely necessary for the company's operations, then we'll need to consider the following for deductibility purposes. First filter is the expense necessary. Then we need to look at who carried out the trip. Was it an employee of the company? Was it somebody that provides professional services for the company? This is very important because if it's done by somebody that's not at all related to the company, then chances are you're not going to be able to make these expenses deductible. Were the expenses really for a travel-related item. So was it for accommodation, meals, transport, car rental, reimbursement for mileages? There can be other options for travel expenses, not just limited to these 5, but these are the main ones. So it's very important to really review what the expense was for. We also need to be very careful with the limits that are permitted for each expense. We'll have a look at what those limits are a little further along. And the expenses need to be registered and correctly registered in the accounting. And finally, a CFDI, as I mentioned in the previous slide, a CFDI must be provided for each expense in order for them to be deductible. If you meet all the first requirements and you have everything in order, but then at the end you don't have an electronic invoice, a CFDI to support that expense, then no matter what happens, it's not going to be deductible. So having gone over these few reminders, let's now look into the details of how the information needs to be included in the payroll receipts and how they need to be reported back to the tax authorities. First of all, let's look at the flow of information and timelines for a business trip. So first things first, a business trip is planned. The company determines whether it's absolutely necessary for the company's operations, and generally an advance is provided to the employee to cover the estimated cost of that trip. So when an advance is provided to the employee, that's when the company needs to issue their first electronic invoice, CFDI. So when does this CFDI have to be issued? Version 3.3 of the electronic invoice complement and version 1.2 of the payroll complement state the following. When an advance is provided to employees, again, they have to be reported to the tax authorities, but you have 3 options as to when this is done. So you can either report it in the payroll CFDI corresponding to the period during which the advance was granted to the employee. So we have travel expense here, but it's important to note we're talking about advances. It can be done in the payroll CFDI corresponding to the following payroll period, as long as it's issued within 30 calendar days of the advance being provided. This should never be an issue, because in Mexico we have to pay at least twice a month payroll, once a week if it's laborers, but for admin employees and people that would generally take the business trips, they have to be paid twice a month. So generally speaking, you should never have more than 30 days between the payment being made and a payroll being due. And then the third option is creating or issuing a separate CFDI. So instead of including this information in one of the 2 above options in payroll, you issue a completely separate one that would just include the information for the advance. Again, this is possible as long as you do it within 30 calendar days of the advance being paid. So what does this look like in the actual payroll receipt itself? So again, when the advance is granted, you need to issue a CFDI, and the information corresponding to the amounts that's been received by the employee for the advance has to be included under the section Other Payments. So in this case, we have an employee that has a 14,000 peso salary. We're adding the 5,000 travel expense, so they have a subtotal of 19,000 pesos that they're going to receive. We're going to calculate the income tax and the social security on the 14,000 pesos only, and the net amount in the end is going to integrate that 5,000 pesos that he needs to have included in his payment to receive the advance. So again, it's included in the receipt, it's included in the other payments section, and it doesn't affect the employee for his taxes and her taxes and social security contributions. But we're including it in the receipt so that we're fulfilling the obligation to report that amount back to the authorities. So now the employee has been on his or her business trip. They've returned from the business trip. A second CFDI now has to be issued based on the supporting documentation that was provided by the employee. It's important to consider that payments that are made with corporate cards, debit or credit, are not considered as travel expenses for payroll purposes. Even if the payments were technically made for the purposes of a business trip and are travel expense related, given that no money went through the employee's account, no registration in their payroll needs to be considered. Now, the employee is going to provide documentation to prove that the amounts that they spent were spent on the travel expenses. However, it could happen that they don't have either a CFDI nor a simple receipt. So regarding these non-verified travel expenses, they're not necessarily automatically taxable unless this is made possible by Article 152 of the Income Tax Law Regulations, which states that 20% of the total amount of the travel expenses can be considered as deductible and non-taxable, even if there is no supporting documentation provided, as long as this doesn't exceed 15,000 pesos per year. You do need to consider, though, that the disposition does not apply to airplane tickets or accommodation. The corresponding CFDIs have to be provided for those two concepts in order for them to be deductible. So that's very important, seeing as these are often one of the most considerable expenses that have to be made for business trips. Now, when do we register the travel expenses? So we went over when the advances have to be registered and filed with the authorities. The rules are pretty clear when it comes to advances, but when it comes to the actual travel expense itself, there's no exact requirement as to when these need to be reported back to the authorities through the CFDIs. We would need to remit to the general rule for deductions, which states that these need to be filed and reported with the authorities within the corresponding same tax year. But there is something else to consider here, and not just consider that as long as it's done within the year, we're complying, because most, if not all, of the expenses that are going to be incurred will have VAT included in the invoice, and VAT filings are to be done on a monthly basis. So our recommendation would be to report all travel expenses to the authorities within the same month that they are paid. So best practice would be to file these reports on a monthly basis. So the employee is returned from his or her business trip, and the second CFDI is issued. So what does this look like actually in the receipt? So the way the CFDI needs to be issued will depend on the supporting documentation that's provided by the employee to verify the expense, and then amounts can either be considered as taxable or non-taxable. So in this first example, we have the employee has provided documentation for the full 5,000 pesos that they received in advance. So we're going to issue the regular, the payroll receipt, the CFDI, including their regular income. So again, they're 14,000 pesos regular income. We're going to now include the 5,000 pesos as an exempt travel expense, and we're going to include that exact same amount in the deduction section under the concept of an adjustment for travel expenses. So we're netting out that amount so that it doesn't actually cause any income for the employee. And then we're going to have the calculation for income tax and Social Security calculated on their regular income only, so that their net amount paid is actually only now their regular income. All of this information regarding the travel expenses is just for informative purposes for the tax authorities. Now, that was an example where the employee does provide supporting documentation for all the expenses that were incurred. But we could have, however, the case where the employee provides supporting documentation for only part of his travel expenses or part of the amounts received in advance. So in this other example, we're considering that the employee only provided supporting documentation for 4,000 of the 5,000 pesos received in advance, and we have 1,000 pesos that in this case we're considering were not used. So the employee provided all the supporting documentation for the 4,000 pesos that they used, and they're reporting that they didn't need 1,000 of those 5,000 pesos. So if we're going to consider that the amount that the employee needs to return for the unused amount is going to be done through a deduction in their payroll receipt, this is how the information needs to be reported back. So we're going to have the 14,000 pesos of their regular salary, the 4,000 pesos of exempt travel expenses, because they did provide all the receipts for that amount, and on the other side, for deductions, we're going to include the adjustment for travel expenses for 4,000 pesos to net out that amount. And then we're going to include 1,000 peso deduction for the unused travel expenses, and then the corresponding taxes and Social Security, so that the employee is returning that money that they've already received in their regular payroll. If there is a deduction for the unused amount in payroll, we do, however, need to be careful with the amounts that we're deducting in order to make sure we're complying with the deduction limits that are permitted by the federal labor law in Article 110, which states that the restrictions that have to be considered when making deductions from an employee's salary, and there's basically two items to consider. We can't exceed 1 month's salary, and the deductions can't exceed in a month 30% of the employee's salary minus 1 minimum wage. So it's very important to take this into consideration so that you're not deducting too much from the employee's payroll. If it has to be done in various deductions, then you'll have to cover it over various payroll periods. Or if you want the employee to return the full amount that they have not used in one go, but you're not able to deduct that from their paycheck, then you can have the employee return the money directly to the company via a wire transfer, as opposed to deducting it from the payroll. However, we do recommend that whenever possible, do deduct that from the employee's paycheck directly. This allows for the tax authorities to have a clear registration of the money actually being returned, because obviously the refund of the unused money is going to be included. I don't have an issue with the authorities considering that that money as having been income, and then obliging them to have to file additional proof that the money was returned. So what happens if an employee does not prove the travel expenses and does not return the excess advance received? This doesn't happen very often. However, should it happen, then what we would need to do is consider the expense as a taxable travel expense. So in this example of a payroll CFDI, the amount would be identified as a travel expense. And in this example, we have 4,500 pesos considered as travel expense. However, we would specify that these are taxable, and therefore this will directly affect the income tax calculation and the calculation for the Social Security contributions. So we would include the taxable amount of 4,500 in the income. We would include an adjustment in the deductions to net out that 4,500 because the employee has actually already received it. So we wouldn't want to add that to the net amount to be paid in this receipt, but we do need to include it for purposes of calculating the income tax and the Social Security. So we've gone over the three different examples of what can happen with the travel expenses. So when the employee provides proof of the expenses for the full advance they've received. What happens if they only use part of the advance? They provide the documentation to prove everything that they've used, and they return the unused amount through a deduction in their payroll. And this example where the employee doesn't provide any supporting documentation for the expenses and doesn't return any of the amounts. So now what happens with the other taxable concepts? So what are the other obligations that we need to take into consideration for taxable travel expenses? So there is mainly two items that we need to consider. First of all, Social Security contributions. So unsupported expenses that are taxable would be considered as like a bonus in the payroll. So in this case, these amounts would be considered as part of the base for the Social Security contribution purposes. If the expenses are duly supported, then they're considered as work tools, and in that case, they're not included in the calculation. As far as payroll taxes go, some states do consider that in order for the expense to be exempt, they must meet all the deductibility terms required by the income tax law. This is the case, for example, for Jalisco, where Guadalajara is located, or Nuevo León, where Monterrey is located. Other states, such as Durango and Querétaro, will consider these as not having to be considered in the base to calculate the state tax on payroll, as long as documentation is provided to prove the expense without necessarily having to meet the income tax deductibility requirements. And other taxes, other states, just consider the travel expenses as exempt without any conditions. Other obligations that employers have to meet regarding travel expenses is the obligation to provide the employee with a yearly report before February 15th of each year, which would detail the amounts that they received of travel expenses during that calendar year. Now, before, this information was included in Form 37, which was the annual income filing that employers would have to do for their employees. With the entering into effect of the payroll CFDIs, this filing is no longer an obligation, because we're reporting absolutely all the income that an employee receives on a payroll period basis. The tax authorities have all this information up to date, so that's why Form 37 no longer needs to be filed. But the company still has the obligation to provide the report to the employees for travel expenses. So how can an employer meet this requirement and fulfill the obligation if Form 37 no longer needs to be filed? And apart from that, we also believe that this form is no longer appropriate for this type of filings, because it only includes the tax and non-taxable travel expenses, but it doesn't have a section for other payments for purposes of filing the information for the advances. So in that case, what can we do? We can refer to the Miscellaneous Rule, which considers that the obligation to provide the report is fulfilled as long as both CFDIs have been issued correctly and within in a timely manner. So the two CFDIs, remember, is one for the advance and one for the travel expense itself. So again, as long as the company meets that obligation of issuing both CFDIs correctly and in a timely manner, then that obligation to provide the report is considered as fulfilled, and you wouldn't need to provide anything additional to the employees. So that covers the travel expenses and advances. Now let's move on to fringe benefits. So again, here a quick reminder of what fringe benefits are. So the income tax law defines that fringe benefits are those benefits that employees receive in cash or in kind, and their aim is to cover present or future needs, and as well as providing for the employee and their families' well-being. Now, the most common fringe benefits are food coupons, savings funds, private medical or life insurance, but these could also include courses for the employees and their family. They could include yoga classes, gym memberships, or any similar natured benefits. It's important to remember that for fringe benefits to be considered as such and non-taxable for employees and partly deductible for the company, they need to be equally provided to all employees or per level, but you can't provide it to one and not the other unless you have a proper structure in your fringe benefits plan. Often there are confusions as to what consists or what is considered as fringe benefits and what would be considered as work tools or training expenses. So again, depending on you have to take everything on a case-by-case basis and analyze each concept to make sure that they're being properly classified. But if an employee, for example, a salesperson is a good example for gas vouchers or mobile phone services, because these are all items that employee needs to be able to carry out their work activities. So those would be considered as work tools, not as fringe benefits. Or, for example, for cases when companies have transport that's provided to the employees. It's often the case, for example, for manufacturing companies, they often have transport for their laborers. In this case, the transport isn't considered as a fringe benefit. It's considered as a work tool. or restaurant vouchers as well. These can also be considered as work tools as opposed to fringe benefits. And then, for example, courses, we mentioned that the courses that can be provided for employees and their families can be considered as fringe benefits, but you need to make sure that you differentiate the courses that are work related and those that aren't, because any work related courses or workshops, language courses if the job requires it, then these are going to be considered as training expenses and again, not as fringe benefits. And it's very important to classify these correctly, because fringe benefits have caps and limits. So if you're considering as a fringe benefit something that's actually a work tool or a training expense, then you're going to be reaching that cap for something that you could be using it for actual other fringe benefits. So if you provide any of these benefits to your employees and you're not sure if you're classifying them correctly, or you're not sure how to classify future benefits that you're going to provide, please feel free to contact our payroll teams, and they'll be more than happy to help you make sure that that everything is in order on that side of things. So as I mentioned at the beginning of the webinar, the fringe benefits as well as travel expenses in advance have to be included in a payroll CFDI so that the information is remitted to the tax authorities. Again, these are benefits that are non-taxable for the employee. It's not going to affect their income tax calculation or their social security contributions, as long as they're provided within the approved caps. But the information does need to be reported to the authorities. So in the case of fringe benefits, these need to be reported to the authorities when the benefit is provided. So if you have, for example, health insurance that's paid for the employees, then you would need to include those amount in the following payroll period, or in a separate FDI, so that the government knows that payment's been made for the employee. It's very important as well for the company to keep a record of the amounts that correspond to each employees. Now, for savings funds or food coupons, that's very easy because each employee receives an actual amount. But when it comes to, for example, private health insurance or life insurance, generally the insurance companies are going to provide a global invoice for the total amount that needs to be provided or needs to be paid to cover the policy. But it's important that they also provide you with a detailed breakdown per employee so that you know exactly how much corresponds to each employee for the purposes of filing the information with the authorities. For life insurance and health insurance, there's no cap, there's no limit. So if for some reason the insurance company can't provide you with the breakdown, then our recommendation would be to prorate those amounts per employee based on, for example, the number of days that they've been working for the firm, so that you are filing a reasonable amount for each employee, something that does make sense, even if it's not the exact amount. But the best thing is to have that detail. Insurance companies do now know this, so they are used to this. So there's no reason for them to not provide this to you. But so it is important to consider this. So we've summarized when advances, travel expenses, and fringe benefits need to be included in the payroll CFDIs. Now let's take a look at what happens on the accounting side of things. So for every travel expense that the employee receives, a debit account per employee will need to be created. And this is important. It has to be created per employee. You can't have a global account for all employees. So you have an account per employee, and every time that they receive travel expenses or advances, then you need to include that in the accounting in order to have the corresponding journal entry. It's also recommendable to have the travel expenses classified per concept, per type of expense, and then subdivide those concepts into non-deductible, deductible, or taxable. So here we have the example of transport, accommodation, and food, and each concept is subdivided into the different types of accounts. I mentioned at the beginning of the webinar that we had limits for the expenses. So it's very important to consider those when classifying the travel expenses, because we have, for example, the daily limit for domestic travel is 750 pesos, for food, 1,500 if it's international. It's important as well to consider that food needs to be, the proof of the expense for food needs to be accompanied by a proof that that it's actually trip, so proof of transport, and also proof of hotel if you want to be able to pay that in cash. If you're going to, if the expense for food is local, so for example, if you take a client out for a meal, then this isn't considered as a travel expense, and then would only be 8.5 deductible. 8.5% deductible, and we need to be paid using electronic means. For accommodation, we don't have a limit for domestic travel, but there is a limit for traveling abroad. We have limits for car rentals, vehicle maintenance, depending on what type of vehicle. And again, always very important to have the CFDI. The CFDI has to meet all the tax requirements, and anything over 2,000 pesos has to be paid by card. Sorry, so it says expenses over 2,000 pesos paid by card, not by cash. If they're paid by cash, then it's non-deductible. Gas has to be paid using a card, no matter what the amount. Having said that, let's take a look at an example. So for example, we have an employee that has received 10,000 pesos in advance for his travel expenses, and he goes on a trip, or he or she goes on a trip domestically, so within Mexico. So we see here that they have spent 5,000 pesos on accommodation. They have a debit card. We have proof of transportation. So it would seem that this expense is going to be deductible. However, when we take a look at the CFDI, we notice that there's an issue with the tax ID. The CFDI has the incorrect tax ID on the invoice, so then that renders that expense, non-deductible. The only way to then have it as deductible is to have the hotel cancel the incorrect invoice and issue a new one with the correct tax ID. But so for the purposes of this example, we're going to consider that as non-deductible because of the error in the tax ID. The food was, so we don't have a limit on the accommodation because we're traveling domestically. The transport was paid in cash. That's under 2,000 pesos, so that's fine, and seemingly we have the correct CFDI. And food for 700 pesos was paid with a debit card, so that will also be considered as deductible. And then we have 3,300 pesos that were not used by the employee, and so that was returned via a wire transfer to the employer. What does that look like on the accounting journal? So we have the 1,000 pesos of deductible transport, and it's classified as a verified travel expense. We have the 5,000 pesos non-deductible accommodation, so it's non-deductible, but it isn't taxable for the employee because they did provide the corresponding supporting documentation. And we have the 700 pesos deductible for food. And then we have the returned 3,300 pesos that was not used by the employee and returned by a wire transfer. So we have that total of 10,000 pesos that was given as an advance. And then we have registered on the employee side the 6,000 700 that they did use for the travel expenses and for which they provided the supporting documentation, and then the 3,300 that has been returned. So we also have a total of 10,000 for the employee. Now let's take a look at what would happen if the employer would choose to tax the non-deductible hotel expense, but cover the tax generated so as to not affect the employee. In the payroll receipt, we would divide the exempt and taxable amounts that we received. So you can see here that we have divided the 1,700, which is non-taxable, and the 5,000 that are taxable. And then we're going to issue, or we're going to include a bonus for the travel expense adjustment corresponding to the amount of taxes that non-deductible expense, and so we're considered here as taxable, is going to cause. So here we have the example of 728 pesos in taxes caused by those 5,000 pesos. So we're going to add that as a bonus so that the employee isn't affected on the income side. And on the deduction side, we're going to include, so that tax, we're going to include the non-taxable 1,700 and the taxable 5,000 to net out those amounts. So at the end, we don't have anything that's owed by the employee to the employer, nor by the employer to the employee, but we are providing that information to the tax authorities. And on the accounting side of things, we're going to have to reclassify the 5,000 pesos from it being considered as a non-deductible accommodation expense to a taxable payroll concept. And we're going to also include the bonus for the taxes that are owed. So we're netting out in the accounting the 5,000 against the 5,000 non-deductible against the 5,000 taxable. We're adding on both the company and employee side the taxes withheld and paid, and so we end up with just the amount corresponding to the taxes. So it is common practice whenever an employee has an undeductible expense to include that in their payroll, but having a tax bonus so that they're not actually affected in their income. But like everything else, each case needs to be examined individually, and obviously ideally CFDIs would need to be provided for all expenses so that we don't have these issues and juggling with the accounting and payroll receipts. Strictly speaking, your travel expense policy could state that if an employee does not provide a valid CFDI in order for the expense to be deductible, then this could be considered in their payroll as a taxable income without the company covering the tax. But this is not that common because we do have to understand as employers that it's not always possible for an employee to obtain a valid a CFDI for their expense. So then we've gone over in an accounting side of things what happens when the employee provides proof for the whole expense, what happens if they only provide proof for part of the expense, and what happens if we want to consider a non-deductible expense as taxable in their payroll receipts. So we've now covered the items that we had on the agenda for today's webinar. We still have a few minutes left for questions. So if you have any doubts or questions, please feel free to share them with us. And if we don't have time to go over everybody's questions, then you will receive a response via email within the next few days. Before we start the questions, and to give you some time to share those questions with us, we'd like you to please respond to our second survey question, and this question is to let us know why you decided to join today's webinar. So the question will come up in a few minutes. Okay, so you have the question now. Again, while while you answer that question, I remind you that you will be receiving the presentation and the audio within the next few days. It will also via email. It will also be available through our website, www.payrollplus.mx, and through our YouTube channel. I would encourage you to subscribe to that so that you have all the latest updates on payroll related items. So we'll finish the survey in 5, 4, 3, 2, 1. Again, thank you very much to everybody who has answered our question. This helps us a lot to be able to focus any other follow-up webinars or newsletters that may be interesting for the audience. Okay, so we have a few questions that have come through. First question is, if an employee provides a CFDI for a travel expense, but it does not meet the requirements, can I apply the rule established in Article 152 of the Income Tax Regulation? Remember that Article 152 of the Income Tax Regulation allows you to consider as deductible up to 20% of the total travel expenses, capped at 15,000 pesos per year. So the answer is yes, you can consider that amount as deductible anyway. Just remember that this regulation does not apply to airplane tickets and accommodation. So for those to be deductible, you would need the CFDI. We have another question related to the registration of the expenses and what happens if the company has not generated any CFDIs for these concepts throughout the year. Can they issue a single CFDI for the total amount generated so far? This wouldn't be the best way to proceed. As we mentioned through the webinar, it's best to do this on a monthly basis, and to have those done through the payroll receipts, but definitely on a monthly basis would be the best practice. So someone else is asking, what happens if the travel expense and or fringe benefits is not included in a CFDI? For travel expenses, the company could be fined and the employee would not have the necessary information to prove that the money that they received was for travel expenses and not taxable income. So it is very important to have that information filed with the authorities as far as travel expense concerned. Regarding fringe benefits, these would be considered as non-deductible expenses. Even if the company has a valid CFDI, for example, for the food coupons or the insurances, if you don't have that information registered through the payroll receipts, then it's going to be non-deductible for the company. We have time for one last question. Are travel expenses that exceed the permitted limits to be considered taxable? If they have the correct supporting documentation, these are not considered as taxable for the employee, and accounting are being issued or registered correctly. Please feel free to contact us, and we'll be more than happy to help you review that. You can also ask for our premium consulting packages. We have various items that we can help you with. So please feel free to contact our teams. So again, thank you ever so much for attending today's webinar. I hope that this has been of use to you, and I hope everyone has a very nice day and rest of the week.